All right, good morning. Welcome back here to Trader Money. Great to have you aboard. I hope you had a fantastic weekend. We got a bunch of snow here, and so it's a little bit of sluggish start for most people around here with the roads and everything. But market starting off on a bullish note here this week, as it really kind of rallied into the close on Friday, as trade talks start to pick up, as there's more talk of U.S. China, coming to the table and working things out. So that helped to propel things further into the close on Friday. And then you can see S&P futures last night fairly weak, at the beginning, and, really throughout the Asian session, just slightly lower, nothing too dramatic. And then Europe opens up, and we see a pretty interesting move here, about 16 points higher here in the European session, and then that tapered off a little bit here, and, we currently see futures up about 10 points. So with fair value, we're looking about an 8.5 point open higher here for the markets this morning, or for the S&P specifically. So, S&P futures, very bullish fashion here, the way they moved last night, the lack of volatility in them. We haven't seen big ups and big downs and all of that. Very much a bullish pattern when it comes down to them. Now, interestingly enough, we have these kind of two areas where we see this little kind of spike action. Right back here at about 1:45 my time, 2 o'clock my time, so 4 a.m. Eastern, and that marks the high. There's a little bit of volume associated with it, but nothing too dramatic for what we tend to see when Europe is opening. And then we have this kind of lull, and then we get this kind of spike up on volume right here about an hour ago that pushes S&P futures back to the same area, and we saw no buying. We didn't see any buying be able to come in and really follow through with that. So it does mark a very interesting area of potential short-term resistance today. It also marks an area of, kind of maybe breakdown. And what do I mean by this? Well, I don't mean that, hey, we read into this and say, oh, the market's going to be bearish because of this. No, I think we could read into this and say, hey, if the market breaks 27.12 here this morning, just need to be a little bit cautious here in terms of some potential downside that could come in. Is it going to be dramatic? Probably not. But that is a move under 27.12 is probably a pretty good sign that buyers really aren't wanting to step into this gap in any sort of massive major way. But the reality is we're most likely going to see a highly differential market here this morning, where we'll see stocks like Facebook, and we'll see stocks like Bank of America and Apple, moving and not necessarily caring too much about the overall market. We'll see Micron go red early on, not really caring about the overall market. We see oil down pretty sizably here this morning, down over 1%, and so that will leave energy a little bit red here this morning, most likely, and as one of the laggards. But you can see oil prices here, and they've had the majority of their pullback here, kind of in the last little bit. But overall, they are opening pretty weak here this morning. Now, two stocks I think are very worth keeping an eye on here today. Facebook is one of them, and you can see Facebook set to gap up a little bit higher. And the other one's Bank of America. Now, sorry, my apologies there. Now, you can see with both Bank of America and Facebook, they're both set to gap up a little bit here this morning. And that's not what I'm concerned about, or that's not what I'm watching. Both of these stocks had earnings reports that were pretty good compared to the expectation, and pretty darn solid compared to some of the rest of its sector. Bank of America had a big gap up here on their earnings, When they came out, and we did not see this in the other banks, we saw in some of the raw numbers a little bit of transformation. And you can see the stock, went a little bit higher in the short run and has come on back to this gap. Now, it came on back to this gap on Friday and created a little bit of a bullish reversal on this level. Right? Nice little bullish reversal off this level. Facebook did the same thing. Now, Facebook earnings were an absolute blowout compared to what was expected, and we talked about it at the time, a game changer, for Facebook, a game changer, right? There had been some negative rumors coming out ahead of earnings, but when they showed the actual numbers, wow, it was pretty game changing there, and you can see Facebook rallied a little bit after earnings. On Friday, sold off back to the earnings gap and reversed off of that earnings gap. And so we have two stocks, very different sectors, do very different things, but with very similar price action off of very solid earnings. And these are two stocks that are set to gap up a little bit here this morning after the reversal on Friday. If these two stocks stay green today, the market's still in full control by the bulls. If these two stocks turn red, there's a major shift going on. And I think the market's not going to be that simple. So you can look at levels, you can look at, different metrics, and I'll look at some of those and whatnot. But bottom line, if Bank of America and Facebook are green today and stay green today, this market is still controlled by the bulls. If they turn red, well, you know what? There's something else going on. And some control is starting to shift, and I think it's really kind of comes down to being that simple in terms of the market read here this morning and what's going on out there in the in the market. I'll take a look at both of them as far as potential trade entries here this morning, but most likely Monday morning. I'll probably wait till a little bit later in the afternoon, but overall we'll have my eye on those. Another one I'll have my eye on is Walmart. Well, Walmart has earnings in a week, so I did be careful of that. I believe they're next Tuesday morning. But this is a company, had a nice little rally here in January, nice little pullback here at the end of January, beginning of February, snapping on back right here in the middle. Had a really nice day on Thursday of last week and showed up on some of my bullish scans, which was interesting because at the same time I had a bunch of, Alcoas and other things show up on some of my bearish scans. And then Walmart, pulled on back here on Friday. This is a stock that can beat to its own drum. Doesn't necessarily have a lot of market influence there. In fact, sometimes it'll do better in a down market. But this is one where if we see a gap up a little bit, which, last I looked, it was set to gap up slightly. Let's see here again. Yeah, no, not anymore. But if we see this with some early strength pushing above 95.80, is something where we could be talking about coming up to this upper Bollinger Band. So I'll have my eye on that. I do need something absolutely perfect to get into with it because earnings are in about a week, a little more than a week, so the options aren't going to be exactly cheap. So I need to be convinced that it's ready for a pre-earnings run. But we'll have my eye on that, here this morning. As far as the earnings calendar, economic calendar, we have stuff going on this week. Earnings are going to continue all month. They'll be, it's not going to be the big, some of the bigger names out there. A lot of those have already reported, but there's still going to be plenty of reports and plenty of bigger names kind of intermingled, with those reports. From an economic data standpoint, there's really not a whole lot at the beginning of this week. As we move forward, we'll get inflation data here in the U.S. We'll get, a little bit of trade data here out of China On Thursday, we'll get inflation data out of China, a little bit more, inflation here in the U.S., some GDP flash numbers, and then on Friday, a little bit of industrial production and this U.S. Empire State Manufacturing Index. So a little bit going on here, not a ton. This isn't a jam-packed economic data week. This is a week of relatively smaller data points, and stuff that's probably not going to be game-changing overall. And so I look at this week as, things are set up, as things go, as, the U.S. government shutdown continues and carries on, and, in one form or the other. Things just, it's one of those where, you trust what you see on your charts and run with what you see on your charts, and go for it. We don't see the analysts too chirpy here this morning, which is, probably to be expected given the overall environment. We do see a few things out there, but not a whole lot there. But overall, I'll be looking at some of these names that built some bear signals into them last week, and seeing if there's not an entry opportunity in them here early this week. Halliburton built some bear signals last week. Alcoa built some bear signals last week. Now, Alcoa had a nice reversal on Friday that I did have to be a little careful about there. But even an FCX we saw come in on Friday with a bearish reversal here. So we'll be looking at some of those, as well as the upside on some things like a Facebook, things like a Walmart, things like a Bank of America, and looking for that as well. We're going to see gold downtick a little bit here this morning, and gold, we've talked about the overall bullishness of gold. It had this next shot up, a little bit of pullback, a little bit of rebound. It's now going to have that kind of second leg down here. About 122.5 is about where I'm going to be targeting to look to pick it up, to look to be a buyer of gold in that area. I don't think we'll get there here today, but we could get a little bit close, to that area. A lot of times these kind of secondary legs, they tend to be, big red Marubozu type candles there. So I wouldn't be surprised to see that here with gold, coming in today. We will see the U.S. dollar rally up a little bit more here today. We talked about this last week as far as, the U.S. dollar, just breaking out. It had this very, very strong topping pattern, and it's ignoring that and pushing on and pretty much breaking on out. And that's that's a big deal for gold, big deal for oil, big deal for commodities, and overall negative for those, and an overall positive for U.S. small cap names, which tend to perform better when it comes to a rising dollar environment here. Okay. All right. So I'm going to, I'll be watching the markets here this morning. I'll jump on video at about probably around 12 o'clock Eastern here today, 10 o'clock Mountain. We'll take a look at some of the stuff that's going on out there. If I've made a trade, I won't discuss it, as I've mentioned. I'm not going to be, discussing my trades, except for on Friday. I'll discuss the entries, exits, and everything about the trade on Friday. But while I'm in a trade, I won't be really discussing it all that much, and we'll go from there. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.